This week on Partner Spotlight, we feature Hatton National Bank's Investor Forum for 2016.
Microfinance, SME, corporate banking unfolding in the weeks to come, which is all about HNB and what it's going to be over the coming years. So once again, thanks very much for your support. It's been a very interesting and rewarding year for the Hatton National Bank in 2015. So I'm very pleased to see all of you and mention that both the board, the management and the entire team is pleased with its performance. I look at some of the numbers and the details of it as we go on. Probably do this presentation breaking it into three areas, and then my colleagues will join me to take on a Q&A session with you all. So very quickly, most of you all are familiar. HNB represents possibly the largest banking group in Sri Lanka, unlike the other banks which are to some extent standalone, if at all having one or two companies attached to it. So you have our life assurance company, our general insurance company, the property development company, which SITMA, which does development, management and maintenance of properties, especially the HNB properties that are around the Equity Partners Group, which has houses, our joint venture relationship with the FCC, the stock broking arm, the primary dealership, the venture capital arm, Lanka Ventures, which is listed, and then our partnership with Guardian in the asset management space. Our latest acquisition, Prime Grameen, which is now called HNB Grameen, is doing exceptionally well. We've just acquired it, it's only a little over 1 year, and we have already crossed $1 billion for this year, and we are likely to hit a 1.1 billion when we close in March this year, which is a phenomenal effort for the microfinance company with just 12 or 15 months since HNB took over. HNB leasing, now the future, the education loans, all trailblazing products that exist in the market and have driven significant volume this year. The professionals and executives continue to leverage our pay fast offering and the privilege banking. Private banking is predominantly driven through BreedPath, the club franchise, and then shortly we are looking at a rebranding of our CRISIL segment, which is the level which is on par with all other banks' private banking offering, which would be launched this month, and you will see us opening many centers and driving that aspect. That would be a very interesting proposition when we bring it through, because it will bring a lot of services in addition to just doing deposits as well as loan products. We will be looking at valuation services, mortgages services, and various other value additions will be brought into this package. In addition to, we continue to be interested in our senior citizens and continue to offer very attractive products with attractive interest rates. The commercial banking space had an extremely good year. Like I said, at the grassroots levels, you have a Grameen operation. Moving on to another product which is world-renowned, the Gamipugudua microfinance product. Then our SME, which we have been doing for ages, I would say centuries. We created a new mid-market because we thought the growing SMEs need to be carefully nurtured and relationship managed, almost like the corporate banking portfolio is looked after. So in 2015, we created a mid-market segment and brought it under our corporate banking division, which in addition manages the large corporates and the multinationals.
There were a lot of good tailwinds that you all had for this impressive performance last year. How do you see things evolving for 2016 with rates going up and generally the macro environment looking a lot weaker?
Given what the macro environment as is, the moderately high interest rates should help spreads if you just look at the banking itself, because the CASA, which is at 45%, remains as is. And in addition, we still see opportunities to do a lot of personal banking, so the consumer finance, because of the higher disposable income on account of taxation, reduced taxation, etc., means there is a lot of opportunity for us to drive the personal banking business, which we have done very well in the cards, loans, the vehicles. More importantly, we see the shift towards housing this year. So in particular, a bank like HNB would be focused on all the salaried borrowers, all our corporates, our SME employees. Will be big opportunities for us to leverage and do that business. In addition, we see opportunities to grow the SME business in the regions. So we see SME growing at the right margins, which was probably a little difficult previously because the margins were not commensurate with the risks that we were taking. But now we think at these rates, SME would be an attractive proposition to do better, to manage better, and to put more resources into. A few projects taking off, and if there are opportunities that guarantee the import business and some of the forex business and some of the trickle-down businesses to some of our contractors would help us. But in addition, I also see the migration of transactions at high cost from counters and with personnel moving into electronic banking and giving nominal fees as an important development that could take place over the next 2-3 years, which reduces our costs, gives more choice and opportunity to our customers, as well as brings in a reasonable amount of fees. So overall, whilst there is much to be done at a macro level in making sure we narrow the gap in terms of the imbalances, get our funding strategy right and at the right price, get our projects off the ground, and I think quite importantly, knowing where our revenue is going to come from is an important aspect. And then once you have identified that, without sort of making mention of too many projects, really home in on what is critical and important and prioritize it. I mean, I see education as being important, I see KPO, BPO being important, driving tourism, important agriculture and bringing technology into agriculture being important. All these areas need to be driven, and we need to get off the ground fairly quickly. If that
Concentrated. Is my good?
yes, it's well.
You have concentrated a lot on traditional bank, which means you lend mainly on collateral. There is also an alternate financing sector that has come in now to lend, not necessarily on collateral. They can lend, and they do lend on an idea. When some of these people come to you and say, look, I've got an idea, can I have some money to get the idea going? You're practically refused. Now, based on the alternate financing sector, how will you stand if it is that people will move away from it and get in that sector?
As usual, Steve, not a fair question and not a fair allegation. Basically, I think for the last 25 years plus, we have been doing microfinance, and the entire microfinance model is run without collateral. We have gone and demonstrated further by acquiring Prime Grameen and its 230,000 lady entrepreneurs who give us no collateral whatsoever, and we continue to invest in them. Going one step further, when you look at some of the ideas that we have actually taken on board and some of the adventures that we get into, I think HNB plays its part quite adequately in terms of taking the necessary risks to support entrepreneurs, be it SME, microfinance, or technology entrepreneurs, in order to drive those businesses and provide them opportunities. Just a good example that we have is recently, you covered it in your papers as well, the supporting Heller taking over, let's say, acquiring the other garment company was a good example of how we, take risks and, back entrepreneurs who want to take risks and take Sri Lanka forward. So we ourselves just moving away from our traditional model, which looks at a little bit of collateral, but we look at a lot of business that does not have as well. Looking at other models, whether be it private equity, looking at venture capital businesses, looking at working with our joint venture partners, DFCC, through equity, in doing other structures, is very much on the cards, Steve. So we look forward to those opportunities. We look forward to competing with the alternate funding options that will be available.
If I may add a few comments to what Jonathan mentioned. Outside corporate banking, the large corporates and the microfinance areas, even on the SMEs, on the personal loan segments, there is a lot of efforts that are put in place in the recent past, maybe the last 3 to 4 years, where we are really increasingly moving to cash flow based lending. And there's a lot of capacity building that has happened in the branch level, where the collateral, if it is there, is a comfort. But really the way in which we evaluate the credit facilities are on cash flow based approaches. So if you look at the entire portfolio as a
We caught up with the Managing Director of Hatton National Bank, Jonathan Alice, to find out more. Right, welcome to Partner Spotlight, Mr. Alice. Now, just to start off, why don't you just tell us how was 2015 for HNB?
It was a very good year, 2015, where we saw many milestones being achieved in terms of growing our balance sheet, reaching the 10 billion profit and loss for the first time in HNB's history. We saw a really good performance where the entire Hatton family rallied in order to bring out a significant performance. So this base augurs very well in terms of the future for us, where we can now look to leverage our branch network, grow our SME microfinance business, drive fees by deepening our wallets and our ancillary business. In addition, we continue to push our digital first strategy, which will see far more product development, channel development on the electronic banking front.
Right, and for 2016, Mr. Alice, what do you all have in store for the bank, and what are the areas that you all are going to be going into?
I still see lots of opportunity in the personal banking area due to higher disposable income. Housing would be an interesting area for us this year. We don't think the vehicle market needs to be as aggressive in 2016 as compared to 2015. We will continue to do our utmost in growing our SME and our microfinance portfolios, and as and when the government resumes some of these key strategic projects which is of national importance, we will look for opportunities to play our part as well.
Thank you very much for joining us, Mr. Alice.
Thank you.